New consumer brands rely on marketing, but chasing traffic alone isn't sustainable long-term. What's important is how to become a new quality brand that truly benefits people's lives. On the current state of new consumer brands, Song Xiangqian, chairman of Qiaqia Capital and longtime investor in consumer sector, said Qiaqia Capital is dedicated to supporting Chinese consumption, empowering local brands, with a long-term focus on China's consumer and modern service industries. Their investment portfolio includes traditional consumer companies like Dongpeng Beverage, Qiaqia Food, Aimu Group, and Giant Home, as well as emerging brands such as Wenhu and Leafen. In this issue of Business Travel Dialogue, Song Xiangqian will share his observations on China's economic development and consumer environment, analyze the transformation path of the traditional consumer industry, explore the foundation of new consumer brands, and how to be down to earth, meet people's needs, and contribute to social progress. Actually, this year, when I think back to the past couple of years, a lot of people have been saying something, that 2020 might have been a really bad year, but it could also turn out to be the best year of the next decade. I think you've mentioned this before too, right? What was your reasoning at the time for saying that?
It was actually around February 2020, right when the pandemic had just started, during a live stream that I said this. So, looking at the next 10 years, 2020 might end up being the best year of the decade. Dickens once said it was the best of times, it was the worst of times. So the pressure for structural transformation in China's future is extremely high. This was also mentioned at the Central Economic Work Conference, right? There are supply-side shocks, sluggish demand, weakening expectations, the impact of the pandemic, plus geopolitical conflicts. And on top of that, we have other endogenous issues that all need to be addressed, so the pressure is really significant. So I think people have underestimated the structural pressures that the economic transformation will face in the next decade.
You mentioned before that the term new consumption was basically created by the media. From your perspective, you don't really agree with the idea of new consumption, right?
I don't agree. Consumption is about creating products and services and delivering them to people, and that's always the case. How is the new consumption different from old? Doesn't it still deliver products and services, or is it just imagined? So essentially, consumption is just consumption. I think there's a difference between innovative consumption and traditional consumption. What's the difference between innovative and traditional consumption? First, it's about respecting the market. Those in innovative consumption observe the market. They know it's now the era of Generation Z consumers. Second, they know how to take advantage of the conveniences created by technology and social media dividends. We have so many traffic platforms, our social e-commerce, and our mobile internet is highly developed, so we have plenty of ways to express the monetization of goods. So what is traditional consumption? Who are the people involved in traditional consumption? They rose up in the manufacturer era, making products, distribution channels, and getting products into consumers' hands through large-scale distribution. Now, young people don't accept this approach. They want their needs to drive things in reverse. They want to take the initiative. Their power is rising. Consumer sovereignty is on the rise. They want to be in control, to tell you what they like. You need to learn to listen to their voices, to create consumer surplus and consumer benefits. In this process, there will inevitably be some back and forth and negotiation. Even with traditional consumer goods, like companies we've invested in, such as Dongpeng Special Drink and Aimu, they pay close attention to consumers, observe market changes, seize technological advantages, use social e-commerce, and understand monetization in product transactions. By keeping up with trends, they can innovate, progress, and achieve continuous updates.
Actually, when it comes to new consumer brands, people often feel that many companies rely on traffic or short-term hype to drive up their valuations, but then their vitality doesn't last long. Some of them are just flashes in the pan. What do you think about the public's impression of some new consumer companies, specifically this perception that some of them are like that? And if a new consumer company initially gains recognition through traffic-driven methods, but later wants to build a more solid foundation, what approaches or methods could it use? Or, if you've observed this kind of process, could you share it with us?
This kind of process is very common. Building a brand is a tough thing to do. The demographic dividend is gone, so now the real opportunity lies in winning people's hearts. The traffic dividend is gone, but the brand dividend is just beginning. Building a brand is a high-level task. I see three types of brands. First category is manufacturing. You call these manufacturing brands, and there are many in China. They have advanced production capabilities, but do OEM or ODM don't have their own brand. The second category is what we call channel or retail brands, right? These rely on channels. Their channel power is very strong, and there are a lot of these as well. The third category is the highest level, which I call mindshare brands. This is when you create a mental preference, and consumers specifically ask for your brand. So in your daily life, you'll notice something. For almost any category of consumer goods you buy, the brands that come to mind usually don't exceed 3, right? For ordinary people, we can occupy the physical shelf, but it's even more important to occupy the mental shelf. That's why the ceiling for a brand is people's minds, and the dividends from winning over people's minds are quite hard to achieve.